Stocks swung higher today after President Barack Obama expressed optimism about a fiscal cliff deal. Now, Sarge, what is your assessment of today's market action?
You know, it had nothing to do with any of the macro that was out there. New home sales, the beige book, oil inventories didn't have this kind of impact. I really don't like what happened here, okay? Even though it's a great rally and my levels seem to have worked, so I should be happy. But what Senator Harry Reid did yesterday, talking the markets down, what Speaker Boehner did this morning, talking the markets up, and then the president jumped in and helped the markets along, it just doesn't sit right with me, okay? When you have this kind of power, when your words can move markets, I think you have to be more responsible. When you're a month away from the deadline and you really haven't accomplished anything yet, well, why would you simply let out, I feel good about this, or I don't feel good about this, or we can do this, or we can't do that? That's simply politicking. And to me, it's really immoral to move markets where people make and lose money based on really almost nothing, just based on putting out words so you sound good to the people who vote for or against you. I don't like it, but I mean, if it works, you got to play it, but it does not thrill me.
And their remarks today helped lift the markets helped them reverse losses after some worse than expected housing market numbers.
Yeah, the numbers were poor, and you know, I guess it's largely because of Hurricane Sandy. They did ratchet down last month's numbers, so the numbers, if you look at it in context, it kind of fits. It's not really a shock. It doesn't help the picture that we have of the housing sector getting better, but it isn't really as bad as it looks, at least not once you look at the way the numbers fit with last month's numbers. So it doesn't really alarm me.
And what about the Fed Beige Book report? What was your assessment of that in light of the fiscal cliff worries?
You know, I'm not really surprised. Yes, manufacturing has taken the hit, and we've seen that with all the Fed districts, that they kind of have shied away from the fiscal cliff, but Richmond was the one bright spot yesterday, and that had nothing to do with the cliff. That had to do with the fact that Boston, New York, and Philadelphia weren't manufacturing because of the storm, so that Richmond was the nearest Fed district that could make up the difference, and they did. So the Beige Book did kind of fit. Nine areas kind of looked pretty good, getting a little better. 3 areas got hurt by the storm, not so good. It was expected. The fiscal cliff, yeah, there are some pullbacks, but I think Hurricane Sandy impacted the Beige Book more.
And looking at the Hurricane Sandy impact and the fiscal cliff worries, how do you think the fourth quarter is shaping up so far?
You know, the fourth quarter is going to be a curveball, but I think they're going to revise third quarter up tomorrow, okay, with the GDP. All right, you're going to see that number come in above 2.5%, maybe as high as 2.8%, when it was looking only 2% just last month. So I think, given that, I think a number around 3% for the fourth quarter, or at least approaching 3%, isn't crazy.
And do you think the markets could rally on that?
I don't. The markets tomorrow may react very positively. Going forward long term, I do think as we approach this solution to the fiscal cliff and these guys start yapping more and more, yeah, I do think we will see some kind of late Santa Claus rally.
This market has fewer players.
We're coming into a Monday where we're
would enter in a new stage of tech.
It's a stock picker's market.
Welcome to the 5 dumbest things.
Apple reported earnings.